All right, welcome back. It's a day full of emotional conflict. That's what I'm calling it. The bond market versus the stock market, and that's one that hits close to home. Another one that hits really close to home is Argentina versus our American farmers, right? The U.S. is backing Argentina primarily for ideological and strategic reasons, centered on supporting President Javier Milei and countering China's influence in Latin America. We don't want it to be communist, right? This support comes in the form of major financial aid packages, offered by the Trump administration. But with Argentina dropping export duties on agriculture, specifically soybeans, that in effect locked out our American farmers from that China market, and they loaded up. They bought 40 cargoes of soybeans and satisfied their needs. Trump says he's going to help our farmers, and I believe he's going to do that, and he's standing by them. And just yesterday, Ag Secretary Rollins announced a slew of actions designed to do just that. Now, supporting Argentina while supporting U.S. farmers is turning out to be not so easy, right? Now, that's one heck of a conundrum, kind of like the one we also have got going on with the stock market versus the bond market as of late. And we know just the guy to talk to both of those. Please welcome to the show, Mr. Craig Bolanos. He's with VestGen Wealth Partners. He's the co-founder and wealth manager there. Thanks for coming on, Craig. Great to have you on. We talked about one of those emotional conflicts earlier today on the radio show when we spoke about, or you brought it up, which I liked it, and I said I'm going to use it on the show, and I am, the bond market versus the stock market. But we also have a unique thing happening where the U.S. government as a whole is backing Javier Milei down in Argentina, but at the same time, they're doing things that are hurting some of our American farmers, which is also a difficult one to swallow. Any thoughts on either one of those or both?
Well, I think on both, there's an old story. You can't have your cake and eat it too. And for every action, there's an equal and opposite reaction. And while some of these things might seem common sense in the wake of policy makers who aren't on the ground floor, no, there's always going to be unintended consequence, and you're going to feel like you're a dollar late. And that's exactly what I see happening here. But I do want to come back to two things that you said. First, I do believe Donald Trump and the current administration wants to protect the American farmer, those who feed us, those who feed the world. I have every doubt that it's going to be rectified. We have to balance our interests at home with aligning our interests around the globe. And number two, yes, we talked about it this morning, but it deserves notice, is that there is an undercurrent behind a seemingly smooth lake whereby there's a push and pull between the bond market, the so-called smart money, that's very worried about employment, and an equity market that seems accepting of the fact that the Fed is going to be able to thread a needle despite having a cataract and it being sunny out.
So you're right, a great point. And so I want to add to that. We talked to Jim Urio at the top of the show, and he made a point where he said 4.02 to 4.2 is a big move for this economy and the 10-year yield. And that's something that like you said this morning, you have to pay homage to it and don't forget it. But his best line was, is it big enough to really cause problems? No. But it's big enough to put it on a screen and keep it open all the time so you've got it within your eye shot, because it's something that you need to pay attention to.
Well, you have to have the reminder, because for all investors, whether you're trading, whether you're investing, whether you are planning, complacency is ultimately your enemy. And I think there's an awful lot of complacency in markets. I think at times there was complacency by policymakers. We're rectifying some of that now. And likewise, I think it's not going to break anything. But even if we come back to the underlying stories that are here, especially in the bond market, I think it does come down to jobs. And Scott, I'm not afraid to say, I think the unemployment rate is going to rise and escalate. I think we're going to be printing a 4.5% headline number in the not too distant future. And that shouldn't surprise people, especially when we're in an environment that is such a no hire and a low fire. I think the capital expenditure for artificial intelligence is going to come, and that needs to come from somewhere. And unfortunately, a lot of it's going to come from RIFs, reductions in force.
So those reductions in force, I mean, I'm a little older than you, probably a lot older than you, but when I went through my economics classes before I got my finance degree eons ago, they used to tell us in my economics classes that 5% was full employment. We're below full employment. So is there a lot to be worried about until we maybe get back up to that 5% level, or we kind of move down the numbers now so that we've recalibrated and 4.5 is more like it?
You know what? Everybody, though, works relative to the psychology of recency bias. The history books tell me that the
Yeah.
United States, which is exceptional, has long run at a 5.67% unemployment rate. But I think we got so good and so well. Remember, Scott, when we printed 3.4%, that was the holy grail. Now we're tracking 4.3. So even at 4.5, is it a problem? No. The United States will stay on top with this incremental job loss, but we have to pay attention to those individuals who it affects with policy, just like we're talking about farmers today and the support in Argentina and the buying of various things that crowded out the American crops. I think we need to look at the same thing because when you print a number of 4.3 to 4.4 to 4.5 to 4.6 to 4.7, it feels widely uncomfortable because the unemployment headline number has been so low for so long. Many people aren't a good student of history, and for that reason, it affects the psychology. I just like to remind everybody that history shouldn't be a mystery, and that's why we talk a little bit about it here so we have some level of perception.
I mean, you make too much great sense. I totally agree with you. And there are stories out there that we are seeing job losses, and some of them are directly attributed to AI. Some of them are slightly, they don't like saying it, but it's really what the truth is. It'll be interesting because, you think about it. If we've got a great production and we produce ourselves out of the problem, that's okay. That'll keep inflation down too. But you know what? We've got an issue now where we've got, say, all the jobs. The jobs that we lost, 911,000. That revision that we saw just about a week, 2 weeks ago. Think about how great the productivity was if we were making all that stuff with half as many people as we thought. We got about 10 seconds to you, and we got to jump.
You know what? I think productivity is the secret. Right now, all of these technological innovations are enhancing the human experience, not yet replacing the human experience. Time will tell. But yes, to end where we started, protect the American farmer. They feed us and feed the world. I think those days are here.
Awesome. I do too. Great stuff as usual. Love to see you. Thanks for being on. Have fun up on the Wisconsin Dells. That's a good Dairyland up there, right? That's what Cow Guy likes at Dairyland. Thank you very much for being on, Craig. All right.